I want to talk about what happened in the last 7 days, and it is pretty significant, especially around the regulatory side of things. Obviously, yes, we have been talking about the SEC for a while, and in recent videos, I even said that a lot of the things that we are seeing from the SEC might just be noise, and specifically the things around the SEC with the Ripple case, a lot of it is just noise. But we have been seeing the SEC taking some significant losses. We're going to be talking about that. Welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. If we check out some recent updates regarding what's been happening around the SEC, let's go back to June 27th. And we have here from Eleanor Tourette, the Supreme Court has just rolled in a 6-3 vote that when the SEC Gov seeks penalties for fraud, a defendant is entitled to a jury trial in federal court as opposed to being subjected to the agency's in-house legal proceedings. This is a huge move against the SEC, weakening the power of an agency that has been essentially going rogue for the last couple of years. And I think that this is great. I think that this is going to not only allow for a fair trial against the SEC, but also a fair fight. But beyond this, we also got a big update from Stuart Alderoty. We have over here, this is June 27th as well. Again, this is regarding that rule. I strongly encourage everyone to join the free Discord. There's going to be a link at the top of the description below. This is one of the most valuable and informative Discords out there, and it's completely free. There's a free side that has a ton of free crypto gems, free market strategies, guides, market trends, free charts, and there's also going to be new cheat sheets dropped in this Discord. And already we have a ton of testimonials from members of the Discord that have been absolutely loving it. So what are you waiting for? Go and click the link at the top of the description below and join the free Discord. Another court slams the SEC, this time for unlawfully rescinding a rule on proxy advisory firms without adhering to the Administrative Procedure Act. The court explains that Gensler personally directed this illegal move, National Association of Manufacturers versus the SEC. So, listen, as we are talking about what's going on around the SEC, it seems as though all of the power that the SEC has been retaining, it almost feels like all of it's getting stripped away all at once. And it's very exciting to see this because, for the longest time, this entire industry has been fighting back against the SEC. Through specific names like Ripple, for an example. But beyond this, we also have over here a big win for clarity over secondary market sales of digital assets. District Judge Amy Berman Jackson has just dismissed the SEC Gov's claim that secondary sales of Binance's BNB token qualify as securities under the Howey test, citing Ripple's Judge Annalisa Torres' opinion that the economic reality of the token's transactions mattered when applying Howey. In her opinion, she states, the government's reliance on the assertion that the crypto assets are the embodiment of the investment contract and its argument at the hearing about the nature of the technology and the interdependence of the platform and the performance of every token is not enough standing alone to bring secondary sales of BNB under the investment contract rubric. Moreover, the agreement is somewhat inconsistent with the singular theory the government has been advancing since this action was filed. We aren't saying that the coins are securities. We are talking about investment contracts. So again, big win for clarity, especially over those secondary market sales. At this point in time, it feels as though XRP is cleared. I don't think that XRP is going to have any issues outside of just Ripple's institutional sales. I think that that's still obviously up in question, and it could very well, stay a big problem, which means that Ripple, guess what they have to do? They have to sell on secondary markets or even have institutional players buy on secondary markets, which is very beneficial for XRP holders and for, XRP itself because of, public trading volume increasing. Outside of this, we have another comment on top of this big win from Eleanor. We have, you can fully expect Coinbase, Kraken FX, and Consensus lawyers to use this opinion to bolster their positions in their own litigations. And the SEC Gov lawyers can no longer argue that the Ripple ruling was merely an outlier that no other judges agree with. Again, this is supporting the win that Ripple did get back in the summer of 2023. and even provides even more substance around XRP. And by the way, for those that actually don't know, Ethereum is still up in question until Q2, possibly even Q3 of 2025. It seems as though the Ethereum lawsuit with the SEC is going to get dragged on. And it seems as though XRP and Bitcoin are the only two assets in this space that actually have clarity, which again bolsters XRP's position in this market as a top contender to flip Ethereum this cycle or even just going forward. Over here, we have from Stuart Alderati. This is just recently July 1st. We have the opening paragraph of today's Supreme Court's decision on internet content highlights crypto's vast potential. In 1997, only 40 million people used the internet, and most didn't even know what it was. Today, the internet is ubiquitous, with users counted in the billions. And here we have, not even 30 years ago, this court felt the need to explain to the opinion-reading public that the internet is an international network of interconnected computers. Things have changed since then. At the time, only 40 million people used the internet. Today, Facebook and YouTube alone have over 2 billion users each, and the public likely no longer needs the court or this court to define the internet. And yes, as we really look at that, I do believe that we are going to see the potential of crypto reach these numbers. I personally see crypto just continuing to boom and boom and boom. And the number one reason why we do invest in the technologies like XRP, although yes, utility might not matter for most people, is because if we are going to see an internet-like boom, and in my opinion, I do think that's going to be a lot faster, and I also think that's going to be a lot bigger, I do think that these utility projects are going to be extremely valuable. But nonetheless, over here we have from Meta Lawman. Now, I did include this post in recent videos. This goes back to January 31st of this year. This is regarding Custodia Bank's motion to judgment. This is a major move against the Fed. I talked about it. This is supporting Operation Choke Point 2.0. If you've missed those videos, just to kind of summarize this, there has been a lot of proof, and this one is pretty much 100% legitimate proof that Operation Choke Point 2.0, or the move against crypto, the anti-crypto narrative, is still here. Custodia Bank was targeted heavily and denied a Fed master account. The Fed master account needed to be commented on within 5 to 7 days. That's how long it typically takes to approve a master account or even deny it. And with Custodia, they had to wait over 20 months with zero response. So they had no option but to sue the Fed, and they continued to do that. Now, we just recently got a big update regarding this, actually, just recently in, I believe, April, actually, of this year, and we have a sad day for financial freedom and innovation in the U.S. A judge has ruled in favor of the Fed against Custodia Bank. No way to sugarcoat it. This is a win for the forces behind Operation Choke Point 2.0. Caitlin Long is a fighter, and I expect we might hear that she will appeal this ruling, but it has been a very long and costly fight against Goliath. And here we have the opinion here, courtesy of course, Eleanor. Breaking: the judge in the Custodia Bank versus Federal Reserve has mostly sided with the Fed in summary judgment and denied Custodia's petition for review of its APA claim and its motion for judgment on its statutory mandamus claim. And this was from March, actually. I thought it was April, but it was March. But again, Custodia Bank continues to fight this fight, as we are aware. They continue to push the narrative. They continue to fight back against the traditional system, holding them down. And I love to see this. And even recently in April, actually, they went on to CNBC. Caitlin Long went on to CNBC talking about why Custodia Bank's business is still going strong and why it's not giving up on the Fed master account. Now, you might be wondering, why am I bringing up Custodia Bank so much in this video? Well, it's because, guess what? Huge announcement. This was on July 3rd. Former Solicitor General Paul Clement, who represented the Loper Bright fishermen in the Scottish Chevron case, has just filed an amicus brief on behalf of the crypto industry in Custodia Bank's appeal versus the Federal Reserve. Clement is fresh off his victory in overturning the Chevron deference, and his brief raises the question of whether the Fed is violating Article 2 of the Constitution by allowing Fed presidents to make official decisions. This was going all the way back to January on discussing this and how it can violate these rules. Again, this was a big fight. This is still something that we are looking at, and it now seems as though we're getting a little bit of a pushback. This is a big deal for Custodia, which is looking for the courts to rein in the unfettered power of the nation's central bank, which recently denied Custodia access to a master account. Clement states, in sum, by affording Federal Reserve Bank presidents significant and largely unconstrained discretionary power, the district court decision raises serious constitutional questions under Article 2. Now, beyond this, check this out. We have adding that Clement has essentially called into question the constitutionality of the Federal Reserve structure, making the case much bigger than just Custodia Bank. Yes, this is much bigger than just Custodia. This is huge for tearing down the walls around the Federal Reserve and questioning their motive here. Again, going back to January, we know for 100% fact that the Fed is a part of Operation Choke Point 2.0, along with the SEC and so many big players tied to it. Now we're starting to get down to business when it comes to this. And we're getting into the deep waters of what's really going on behind the scenes. Now, also over here, today, Blockchain Association filed an amicus brief in the 10th Circuit in support of Custodia Bank's case against the Fed. Our brief tells the story of debanking crypto and why it is crucial for industry participants to have safe banking options. Now, if we actually go over here to the Blockchain Association, they have a ton of support regarding a lot of the major bills getting pushed. For example, the FIT21. If you actually go to this and see who was supporting this, I don't know if they have it here, so they actually don't have it here. But Hedera, Ripple, Algorand, a lot of big players were in support of this with the Blockchain Association. Again, I think that this is one of the biggest names in the space that you need to be focused on when it comes to getting actual good policy pushed forward around this entire industry, and potentially even clarity around crypto entirely in the US as well. Focus on the Blockchain Association. Now, beyond this, if we go and read more into this, we have Custodia's case raises an important issue. There is no justification for treating companies in the digital asset industry differently, forcing them to operate without access to national banking frameworks. The Fed's claims that digital assets raise safety and soundness issues, protects large incumbent banks, and makes it harder for industry participants to find banking partners. This leaves customers out in the cold, and Custodia has fallen victim to the scheme. Bottom line is that the Fed Reserve master accounts provide safety for banks and their customers. The inability to access this system hurts the millions of law-abiding Americans who participate in the digital asset economy. Let's hope the 10th Circuit does the right thing here. Now, the thing about this that's crazy to me is, the Fed has claimed that digital assets are like a safety problem and there could be issues. Custodia Bank is 100% different in this case. Although the deposits are not FDIC insured, if we go over here and read this full breakdown, right? So this is a full breakdown for those that didn't, watch those videos, between two major Fed banks, basically. So we have one Fed on one side from Kansas City and also the Fed in DC. If we look at this, we have liquidity, for an example. First off, risk management. Kansas City Fed concluded that Custodia had strong risk management practices. The Fed in DC said significant risk management gaps. Liquidity. Kansas City Fed concluded that liquidity risk was relatively low at Custodia. This makes sense because unlike banks that use a fractional reserve business model to lend out deposits, Custodia uses a fully reserved model, meaning it retains liquid reserves covering over 100% of the deposits it takes in. So although, yes, they're not FDIC insured, they have a fully reserved model. And then, of course, with the Fed and DC, insufficient liquidity risk management processes. Again, it just shows you there's a big problem here from the Fed in DC. Kansas City Fed was all on board for Custodia Bank getting a master account. They even talked about how good Custodia Bank was doing in terms of their business model here. What really happened in DC? What's going on in DC? And we've talked about this. It feels as though there's a big issue with the Biden admin. Not even to bring politics into this or anything like that, but for the longest time, this space has been getting constricted and choked out by this admin. The SEC is a part of this. The Fed is a part of this. It goes all down the line. we continue to see the anti-crypto army win. This is a big problem. But hopefully, just like they said over here, hopefully the 10th Circuit does the right thing here. Because Custodia Bank is a crucial piece of the puzzle, in my opinion, for this entire space. They are a solid player. I've been following them, listening to what Caitlin Long has been saying for a while. I think that this would be a solid player in the space, and I'm hoping that we can get some movement here. But beyond that, it seems as though the SEC has been taking L after L, losing a lot of power. I'm hopeful that we can finally move forward in this industry. Hopefully, maybe at some point in time this year, maybe. Let's cross our fingers. We get some solid regulations. Maybe clarity by the end of this year. But I doubt it, considering the fact that when we look at the timeline for a lot of the FSB, IMF, the BIS, all of their moves, it's around roughly the end of 2025 into 2026. But we could hope, right? Let's see what happens with the Ripple case as well. I think that we could very well be close to the finale. That's my opinion. Again, we don't know what's going to happen with it. I'm not putting out a date because I don't care to, throw dates on it, but I do think that we are getting close. But with that being said, if you guys enjoyed this video, if you guys did, definitely leave a like, subscribe to notifications on if there's more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.